Good afternoon and welcome to Multifamily um, Monday. On this Monday, July 26th, 2021. Wow, we're rocking and rolling. Crushing the halfway point in the year. It's been an interesting year for commercial real estate, multifamily here in the city of Chicago. We've seen a lot of musical chairs over the last 6 to 12 months with kind of changing of the guards, if you will. We have been seeing some investors beginning to look at the outliers in their portfolio and make some adjustments, kind of hunkering down. Other investors are starting to move some outliers in their portfolio or even take a hard look at the entirety of the portfolios as we prepare to brace for significant headwinds coming at multifamily owners. One of the big items that comes up every time I'm talking to a Chicago property owner are uncertainty around evictions, uncertainty around property tax increases. There's a lot of talk about sustained talks about inflation. We have heard it come up over the years, kind of as a passing phase, here and there. But it seems like over the last several weeks or several months, even the I word, if you will, has been consistently in the news media. Bloomberg's and Reuters and some of the other channels that dedicate strictly to business. We've been seeing the cost of things increasing, starting with lumber, which is making ordinary unit turns a little bit more expensive, a little bit more comprehensive, and which is kind of complicating things a bit for owners. I've actually talked to an owner that just, because of the unit terms and things like that, they've decided to just do developments. And they're moving out of this space, moving into the development space. But also you have a number of people that are moving into the space that are have substantial residential 1 to 4 or smaller portfolios of 6 to 12, 18 units that are moving up into the space. And then we also have activity coming from East Coast and West Coast as they are seeing less opportunities for yield. They're looking at the Midwest and Chicago as an opportunity to get a decent return on investment, not knocking it out of the park, but definitely a solid return without all of the ebbs and flows that you see in some of the other places that have gotten the sharp spikes and then the sharp downturns as the ride's gotten a little bit bumpy. So it's just a musical chairs. Some guys are getting out as usual. Some guys are getting in. One of the common questions I'm getting asked by buyers is, hey, why are they selling this? And it's real estate, right? People buy it, people sell it. It's investment property. You buy an investment, you cash flow it. At some point, you sell it, which creates the opportunity for the next guy that's trying to get in. We do here at Multifamily Investment Advisors mentor investors that are trying to grow up in this space. Sometimes we got a client that has a few hundred units. His nephew's starting to get involved in real estate, and we're helping him to purchase his first 8-unit apartment building. And also brokers that are looking to get in this space. I'm part of the National Association of Realtors SPIRE program, where we're inspiring young adults looking to get into real estate and look at real estate as a career move. and the different tranches along that career path that you can take. When you just say, hey, I want to get into real estate, or I want to get into commercial. Commercial is a huge, huge industry. So it's one thing to say, hey, I want to get into commercial, but in reality, what are you saying? One of the things that I want to bring out is, hey, even Drew Heitzman here, our financial analyst and strategic. He helps us with the strategic direction of, based on the numbers, where we're going and what we're doing as a multifamily team here at Keller Williams Commercial. 4 years ago, Drew, were you an intern in commercial real estate, or how'd your career start?
I started off as I interned with Marcus Millichap in the summer of 2018, and I was with Marcus Millichap as both a broker and an analyst through January of 21, and ended up with Multifamily Investment Advisors, and been smooth sailing since.
Yeah, and that internship program is, I remember I worked with you when you were interning over there, and the intern program got you able to come in and get a understanding of the commercial real estate industry, the real estate industry, from a perspective that a lot of us don't get to have. And I believe at that time you're working with a couple different teams, helping them to build out databases, helping them to underwrite deals, from multifamily to mixed use to office to retail even. And to get that kind of exposure through an intern program, a mentoring program, I think it's important in this industry. And then you finished college, right, at University of, was it Urbana, U of I?
Yes, University of Illinois, Urbana-Champaign.
And what did you go for? What was your degree?
I studied consumer economics there, and also public policy and law.
Oh wow, look at that. That's pretty good. I did agribusiness economics in undergrad, and it was a lot of fun. We got to take some marketing classes. We got to understand how the business of things worked, and then you get to come to school, come to work and apply it. So you graduated, you got back into commercial real estate, and here you are looking at the market. And what are you seeing out there as far as in the marketplace today, as far as the capital markets? What's the 10-year doing? Give me some insight. Let me see if I can make sure.
Sure. So the 10-year climbed up to 1.28, which is 11 basis points. This is the 10-year yields claims came in higher than expected. There were 419,000 unemployment claims versus an expected 350,000, but the yield has recovered. And then in terms of my underwriting, I've been adjusting the yields that on the deal 5 for quite some time, from about March through June, and then we saw the 10-year drop drastically last week to 1.16, and recently we've been decreasing the 10-year or our interest rate to about 3.5. But I think that we'll see the 10-year climb back up to 1.5 sooner rather than later due to inflation, like you mentioned, Tony.
Awesome. Thanks for sharing that, Drew. I'm getting a little bit of a delay on my end. Kelly, are you seeing a delay, or is it just me?
It's a little bit choppy on my end.
All right. Thanks, Drew, for sharing. We're going to get Kelly in to talk to us a little bit about what you're seeing out there. I know, Kelly, you're talking to investors, local investors, as well as investors from different parts of the U.S. And I'm sure you're getting mixed reviews. Some people coming in hard, other people are kind of standoffish or kind of wait and see. Give us a little bit of insight into some of those conversations you're having out there.
Sure, Tony. Yeah, just as you said, I am getting quite mixed reviews. I do speak with local investors daily who are very familiar with the Chicago market, very familiar with the Chicago neighborhoods, and very familiar with the cap rates that they should that they expect in certain in across the different areas in Chicago. We also speak with a lot of investors from other parts of the country. We speak with a lot of investors from California, New York, Arizona lately, and New Jersey. Those are people that we speak with often. They have outlook on Chicago. A lot of times they're pretty optimistic. They look at Chicago as an opportunity for them where their money can go further than what they're used to in the markets that they had been investing in previously. So Chicago is very optimistic for them, definitely.
What about any investment opportunities out there that kind of catch your eye, or that locals as well as out-of-state guys should be trying to pay attention to?
Well, actually, I'm glad you asked that, Tony, because we do have quite a bit in our inventory that local and out-of-state investors are definitely interested in. One of the portfolios that we're seeing a lot of traction in, a lot of interest from local guys and out-of-state investors is a portfolio that we have in Brainerd. That's 59 units. And we also have another portfolio. Well, the portfolio in Brainerd is 59 units. It consists of 3 buildings. They're all within a block of each other. We also have another portfolio in West Chatham that's getting a lot of traction as well. That's 55 units. It's 3 contiguous buildings. So a lot of investors that are interested in picking up 100 units and plus are really looking at both of those portfolios to pick up. If they did, it'd be about 114 units, all in the South Side. Not too far from one another, where it makes it easier for them to manage it. That investor can get in with the low per unit price of less than $60,000 a unit. When you're combining both of those portfolios, it gives you an opportunity to pick up a critical mass of assets within a few miles of each other. And you also have great cash flow.
Yeah, let me talk a little bit about that location, because we kind of Brainerd. So there's a metro stop in Brainerd that my understanding continues down to Millennium Station. And it's just before it goes Beverly, then Brainerd. It's the Brainerd stop, and that's about a block and a half from the portfolio, maybe 2 blocks, depending if you're going to the furthest one. And the community is one that we often jump over. We go to Beverly or we go to Chatham. We're trying to get east of the Ryan, but it's kind of tucked in a way there where it feels like it is. You know, Chicago has 77 different neighborhoods, 77 different cultures. It's 77 different things going on in each neighborhood. This is close enough to everything. You're 5 minutes from the Ryan. You're also 5 minutes from the shopping at Beverly, 95th. There's the Menards, there's breweries, there's restaurants, there's everything. So I think it's well situated, and every time I go there, I've been going there for a number of years, it feels like I'm in a different neighborhood, and I am. So I really like the Brainerd opportunity. And then the next train stop would be West Chatham. They're expanding the Metro train. They're expanding the Red Line through 133rd, and they're building a stop called the Auburn something stop. It's going to be right next to less than a block and a half away from the West Chatham opportunity, which is another 55 units of contiguous real estate. And that's one of the challenges with Chicago is you got a lot of investors that want to buy 100 plus units, but 80% of our stock is 30 units or less. So in order to pick up 100 units in the city, a lot of times you have to get a critical mass. So they will come in, some of the largest real estate companies on the South Side, Pangea, for instance, WPD. When they started with an 8-unit apartment building. And then that was the first purchase, both of them, by the way. And they started looking at other opportunities in that nearby vicinity and growing their portfolio out. So with these two opportunities, we are giving you opportunity to come in and come in day one to acquire a critical mass of buildings, 55 units and three contiguous buildings, corner of 79th and Normal. And then you also have Brainerd, which is 59 units, 3 buildings, right around 90th and Bishop, 94th and Laughlin. I would implore you to ride by them and see the locations. We'll share the addresses. If you reach out, send us an email. I see the email address has been in the chat. And just definitely like local investors. They understand the terrain. They understand what they're getting into. The conversation is a little bit easier when we're talking to lenders and things like that. But you know, at the same time, we're not going to let that get in the way if somebody from out of town has their ducks in a row and they're getting aggressive on the property. We will work with them, but we also work with them to ensure that we set them up for a win-win situation. We don't want the building to come back. We have you interview with property management companies. We'll have you talk to some local attorneys that'll help you with the property taxes, help you with evictions, help you with getting the deal closed. And we're here too. Sometimes us as brokers, we outlast the management companies. Maybe they do good for a year and a half, and then we want to switch gears going into year 2. We're still here. We don't just sell you the property and disappear. We want to see our investors successful at the end of that. And we also keep a pulse on the lending, what's happening in the lenders, who you can talk to about a 1031 exchange and those kind of things to make sure that we're giving you the whole 360 of a process. Sometimes we're moving so fast that we kind of brush over these things, but over time, I've come to learn that those are things that are really important to our clients. Is the fact that we're not so much transactional brokers. We're buying into your investment strategy, poking holes in it. Sometimes, depending on, we'll push back on some of your ideas at times, and say, hey, have you seen it from this perspective? But we really want to create win-win situations for our investors as well as our sellers. It shows that that's important because every day more and more investors are choosing to do business with us, to trust us with their precious assets, to identify the correct buyer, and give us enough latitude and landing strip in order to do that and to negotiate at that buyer's pace, right? And to make sure that we're getting the deal done. Because the last thing a seller wants to do is to see a building that he's put so much of his time and effort into end up going into the hands of a buyer that doesn't really take care of the asset afterwards, or maybe even end up giving it back to a bank. So that's important. And we do kind of get involved with that. Also, sometimes it's little things like seeing if they can keep the janitor on staff, or something like that, which a lot of times the investor's like, hey, he understands the property. He already knows all the tenants. Why would I go and pay somebody else the same amount of money to start over when I can maybe even give this guy a little bit more to take on a little bit more responsibility around the asset. So just some of the things, some food for thought that I wanted to throw out there. We also have an opportunity over in Hyde Park. 53, I want to say 5228 South Blackstone. We are getting activity on it. Investors are looking at the asset. We're looking at 40 units. 24 apartments, condo quality units, central air, uh, dishwashers, in-unit washers and dryers, built-in closet organizers. I mean, a real gem of a property in a awesome Hyde Park downtown location, just above, uh, uh, just down the street from the Target, next door to the Fifth Third and Papa John's. And if you go the other way, there's Pete's Coffee across the way, and the Mesler restaurant with the hotel that they just built. So right in the mix. The University of Chicago students went back for the fall, and the owner got over 100 applications from quality tenants wanting to move into the building. He had just got done rehabbing them, and they're gorgeous. And then you have the stable retail tenants on the first floor. Look at this lineup. You got Boston Market, who's been there since the 90s, aren't going anywhere. Next door to that, you have State Farm. You also have Betty O's Day Spa. Betty O's Day Spa has been a staple in this community since the 80s. I want to say it was one of the things that Oprah gave away on her show years ago, before I even knew what a day spa was. But that's what those are the quality of tenants that you have there, and then some long-term staples in the community. Some of the contractors and Piano Fingers and some of the other guys are in there. It's just a solid investment that you can pick up with a decent return, and I believe there's upside over the years. So if you want to call us back about those opportunities and more, we'd be more than happy to walk you through them. We also have a Tri-Taylor value add opportunity coming up, coming to market very soon. If you're interested in getting into the Tri-Taylor area, give us a call. Another good opportunity. I just wanted to share some of those with you because we're moving fast, talking about the economy and this, that, and the other. But definitely want to make sure that we help you guys out that are trying to level up and build up your portfolios. Anything else to add over there, Drew or Kelly?
You got it all.
Yeah, I think you've done a good job of summing it up, Tony.
All right. Well, thanks for checking in with us. If it's Monday and it's noon, the multifamily team will be here to bring you an update on Chicago multifamily investments. Thank you.